Welcome back, everyone, to another one-on-one with Jerry Hall. Today, I'm excited to be bringing you a conversation I had with Mr. Douglas Borthwick, a fabulous person. He's an FX trader, very skilled, former Wall Street practitioner. We're going to talk about Ripple. We're going to talk about cryptocurrencies. We're going to talk about the US dollar and foreign FX markets, as well as stuff where he got his influences from and who he's influencing now. That conversation and a whole lot more. Doug, thank you so much for taking the time to chat with me today. How are things going there as you're sequestered in your house?
It's great. Well, we're rather safe here, so we're very fortunate. But certainly, there's a lot of folks that are hurting out there. We're certainly, we're concerned and would like to, hopefully find out what they need, and if we can get it to them, we'd love to.
That's incredible. I love to hear that. You're part of a community and you're willing to help. That's great, man.
For sure. Yeah.
I'm sure a ton of folks that are going to tune into this program are going to recognize you from the new Wall Street Roundtable, because you were one of the guys at the table as a currency expert. You talked about, and this is back in 2018, you talked about Ripple, you talked about XRP possibly being listed with, spot pricing against the euro, against the dollar, against the Japanese yen. And you saw a place where that reality could happen. And I think you even gave a time frame, something like 2 to 4 years or something like that. And I was curious, when did you learn about Ripple and the value proposition that I guess that it brings in the digital currency XRP?
Well, when you trade currencies, as I do, you know the intricacies of every single country that you deal with. And there are countries out there like the Philippines or like Brazil or China that have very illiquid currencies that you can't change into the US dollar overnight.
Okay.
And when that's the case, you think about folks and you think about instantaneous payments. And it's a tremendous thing if someone can give an instantaneous payment from one source to the other. When I do a currency trade in the Philippine peso, at least this is the case 5 years ago, if I did a Philippine peso trade, I had to show up in the Philippines or have someone for me show up with papers saying that Philippine peso trade was related to equities or fixed income trade. That's crazy. Why is it that you can't trade these things in and out quickly? Now, the Philippines have a heck of a lot of folks abroad that are working in hourly type jobs or care jobs, and they want to send money home. And if they send money home and they go through a traditional way of sending money home, they lose a considerable percentage, be it 5%, 10%, 15, 20%. And that's not very good. But I ran across Ripple because I was looking at different payment systems and how did different folks look at payments. And Ripple had figured out the way where they could do an instantaneous payment where I could sit there with my dollars, I could buy XRP, I could then sell the XRP. Someone then locally in the Philippines could sell the XRP that I send them and get PHP. And I thought, this is fantastic, this is phenomenal. Because in the currency market, we're a 2-day settlement business. Now, 2-day settlement, you think that works great, that's super. But if you were dealing with Lehman on the day before Lehman went under, 2-day settlement was not very good.
Right.
Because you didn't know if you were going to be receiving the Swiss francs that you thought you'd bought or the yen that you thought you'd bought. And so 2-day settlement it's sort of like, yes, it works. And writing a letter to somebody works and they'll get it in 2 days. If I'm writing it in Connecticut, they'll get it in 2 days in New York. But they'd probably rather see my email instantaneously. And I'd like to get the reply immediately as well. And I think that payments have moved into that arena too. Why should we wait for 2 days if we could get it immediately? If I want the money in my pocket today, I'd like it. We've already been reading about folks that have gone to their banks over the last week and said, look, I'd like to withdraw money. How much would you like to withdraw? $10,000. I'm sorry, sir, we can't do that, but you're limited to $3,000 today. That doesn't bode well for fiat. It doesn't bode well for traditional currencies. And it makes folk think, well, maybe I should keep money somewhere else. Maybe I should keep it in cryptocurrencies. And to me, cryptocurrencies are very exciting because there's the instantaneous aspect of the payment system. I think that when you add in a KYC and AML, then it becomes even more interesting to the mainstream. And I believe that there's folks now that are out there that are working hard towards creating a clean shirt when it comes down to cryptocurrency. And that's the exciting area for me.
Very interesting. You know, that was, I'll tell you, that was the value proposition that I saw when I got into this space back in January of 2018. Kind of started sifting through the top 10 cryptos. And when I really, you know, I read about Bitcoin, I understood the security, I understood the element of that. The part that the value proposition that they presented to me didn't make sense because of the cost of the security. I understand security is paramount. I got that. But the cost of security, I didn't get. I didn't understand how proof of work could remain secure once the algorithm, you know, the code has released all the tokens that can be allowed to be mined. So in X amount of years, how is Bitcoin going to remain secure? So I kind of sifted through that. I really liked Ethereum and the smart contract element. I thought this could revolutionize so much commerce, right? And just, you know, disrupt things that I'm not real happy about. I'm not a big fan of going to lawyers and things of that nature and to get this particular contract and, you know, whatever. That's my story. I don't want to defamate all over lawyers, but not my favorite thing to do. So I really got attracted to that. And when I looked at Ripple and I saw what they were proposing for payments, and Ripple, the company, as they were building RippleNet, that here's this entity, the software enterprise company out of California, creating a system that works behind the institution's firewalls. So all of the regulatory issues that if somebody were building something outside of the system would come up against are gone. So I saw this is a quick path to implementation and hopefully adoption with network effects, and the actual economics of the token and the speed and the cost and it was just amazing to me. And it was like, okay, I think I found what I'm going to invest money in. And so far I have, and I'm not unhappy with the progress that's being made as far as the network and the infrastructure around the world. I'd be happier if the price was higher.
Well, I think that they do a very good job in trying to separate the two, you know, XRP versus Ripple.
Right.
And certainly there's XRP, the token, and there's Ripple, the company. Now, the company, I think, has been very good in going out there and saying, this is what we stand for. We're about making payments simple. And that's a great thing to stand behind. It's a great thing to stand for. I would say that if you're buying XRP, though, because you think that they're going to revolutionize the industry when it comes, that Ripple will, I'm not sure that that's the right trade. And what I'm really interested in is finding ways to use crypto for traditional ways, in traditional ways that pass all of the rules of law that I know from the traditional markets, and finding a way to essentially weave in, I guess, as Ripple is doing, weave in crypto into what we're doing in traditional markets and finding a way to make it more efficient. Right. Now you talk about Ethereum and smart contracts. Obviously, that's a phenomenal thing as well. If I have a smart contract that's sitting on a token and that smart contract allows me to do X, Y, and Z and doesn't allow me to do something else, for example, you can write in KYC on a smart contract. That's fantastic because now I can only sell that token to someone else that's also been whitelisted. Now we're keeping everything safe, the environment safe. We're using AML in there. And, you know, regulators can look at something and say, okay, well, we can see that this wasn't bought by terrorists. We can see everyone that owns it at the right time. Now you're using the technology, but you're doing it in a legal way.
Gotcha. Well, I'll tell you, I have a perspective on that. And that is this, that although I'm very clear that when I invest in the XRP token, I am not investing in equity in the company Ripple. I'm very clear about that. However, I do see, and this is a perspective I hold, is that my investment in XRP is literally an investment in the protocol. Now, Ripple has built an incredible network on the XRP ledger. However, there are many others doing, you know, not similar payment type things, but innovating on that XRP ledger. And to me, the XRP token is a representation of the protocol. And it's the protocol that I feel really has the value. And I believe that value will extend to the token, because the native token in that protocol works so well. I mean,
Right.
it's like it was made for it, which it was, right?
Right.
Bitcoin wasn't made for the XRP ledger, but you can make it work. Ethereum wasn't made for the XRP ledger, but you can make it work, with a ledger protocol and things of that nature.
I understand your thought process there and on the
Okay.
investment side. Now, I think though that most people that invest in cryptocurrencies today don't really understand the underlying architecture behind the cryptocurrencies. Then they buy a basket of them to sit there because they believe they reach the hype that comes over Twitter, and they say, oh, look, fiat, they're printing it like crazy. There's a limited edition, though, of a limited number of these coins specifically in the market in crypto. Let me hold these and I can keep my wealth much, much safer. And I can transfer it, across borders, or I can transfer it to someone else much, much simpler.
Mm-hmm.
And I think that all of these are worthy. And the reason why someone gets involved in it, to me, it's irrelevant why they get involved in it. I think it's more important that people do get involved in it, because obviously this is something that's all about adoption. And crypto is all about the more people that start adopting, getting into it, opening up digital wallets, getting used to the transfer of assets from one wallet to another wallet, or to trading online. The more folks that get into this and understand it and feel comfortable doing it, then obviously the more this technology is going to expand.
I agree. There is that the population value proposition through adoption, i.e. the results of network effects. One of the big, though, compelling cases for me is the actual institutional corporate bank money remittance type companies, where it is about payment, it is about settlement. And in the digital asset space, in my opinion, the XRP ledger, RippleNet are they're the top of the game. They are the top of the heap now. I'm not saying they won't be displaced at some point in the future, because a lot of things do. But if you follow power laws and things of that nature, I think they got a great chance of being extremely successful, creating a tremendous amount of value because of its utility. It's
Well,
just
one of the best things that they can do is they can point to the value that they've created every single time a transaction goes through, because you can see the cost of doing it over their system versus the cost of doing it in other ways. And that's key. Is everyone has to be able to show the value that they're bringing to the table immediately. And when you can see that, you start adopting it. And so, yes, they've been very successful in that. But I think that when you pick something and you pick a specific part of the industry, it's much more simple to become an expert if you pick one specific thing and you go after that and say, this is what we're going to be known for. And that's what they've done. And I think, obviously they're doing a very good job of it.
right. So, something that I found also like really interesting, I do my homework a little bit. So I checked you out on LinkedIn. I did my little Google searches and stuff. And one of the questions that came up for me was, here's this bright guy coming out of Yale Business School, and you decided at least it appears from what I can find, is you've kind of you've been into the currency market game pretty much right out of school.
Out of business school, yeah.
Yeah. I'm curious you come out of Yale, that's prestigious. You could have gone and done anything. What was it that attracted you to the forex markets?
Well, the currency markets are about playing, 3D chess.
Ah,
You have to understand what the finance minister's thinking in Japan, what the finance minister's thinking in the United States, what folks are thinking about all around the world, where there's easy money, where money's tough to get. And you have to sort of think ahead of time of where you think markets are going to move. And I have a very strong interest in global economics, in fiscal policy, and being able to figure all of these different things out, understand what someone's thinking in one country versus another, and then being able to play with that and make money from it on a 24-hour basis. Obviously, I think that that's very interesting. But you could trade when you're a currency trader. It's sort of like you become an expert in something for a week or two. Right now, I'm sure every currency trader believes they're an expert on the coronavirus. 2 weeks ago, they were probably an expert on something else. But every 2 weeks, you become an expert in something because you just read voraciously about every single thing you can think about. And so you become very well read. You understand something very well. You're dealing with lots of different cultures. Whether I'm out to dinner with someone from Japan or China, Europe, it's a constant, talking, getting ideas from folks around the world. And I didn't think I would get that if I did US equities. And I'm from Scotland myself, so I'm international in that on that side of things. And I wanted something that was international in focus, where I worked with people that were international, and we were just constantly throwing around ideas that were more global ideas as opposed to domestic.
Well, I think that's incredible. One of the things that popped out was, matter of fact, one of your coworkers who did a little write-up on you and talked about your time that you two worked together on, I hope this is correct, the Latin American desk. I know it was around Latin America.
Yeah, that's right.
And see, I live in Costa Rica. I'm broadcasting to you today from Costa Rica. And one of the elements of my being involved in this new digital asset space is twofold. One, my desire to help educate the Spanish speaking population. So I'm working with some friends. We do a thing called Crypto Espanol, where we take a tremendous amount of English language news, information, and educational materials, translate and provide content in Spanish. Mm-hmm. But also there's a business element that I think it could be in play here, and that is a digital asset association of sorts, where we help facilitate the creation of payment service companies, FX conversion into digital assets, working with folks like Bitso in Mexico looks like they really want to expand and have a large Latin American presence. Uphold in the United States wants to have a large Latin American presence. They're bringing in these digital assets, whether they be cryptocurrencies or digital representations of gold and silver, and even digitalization of existing countries' fiat. Mm-hmm. I find really intriguing. I think there's businesses to be made there and to help foster that innovation down here, because it seems to be not a national priority in any one of these particular countries, other than possibly Brazil and Argentina. Chile's got they've been leaning in a little bit, but for the most part, everybody else, other than Mexico, Brazil, Argentina, and Chile, they're just kind of not interested yet.
Well, what's interesting is in emerging markets, folks have more cell phones than they do landlines.
Exactly.
And so people bank on their phone. They use their phone pretty much for everything. And that's the same in Latin America as it is in Africa. Right. And so digital to them is more native than is analog. And so, introducing digital currency or introducing digital, obviously they're already using digital banking. They're already using digital when it comes down to their phones. It's not really that much of a leg over. Now, if you're over 40 years old in the United States, it's almost like this is a whole new thing. Because you tell somebody, look, you should invest in Bitcoin, or you should invest in digital gold or digital oil. And they say to you, why would I do that when I can go into the equity market and I can do the same sort of thing right now? And, that's a much tougher sell to the 40-year-old plus in America than it is talking to someone in one of the countries in an emerging market country, like, for example, Costa Rica. Huh. So there's a very tough sell here. It's sort of like, folks under 40, millennials, and when you read about them, the top 5 holdings that millennials hold in their portfolio, GBTC is one of them. So they own more GBTC than Netflix. And that tells you that under 40 years old, that generation, they like digital assets. They want to be involved in digital assets, but maybe they don't want to deal with a wallet. because that's why you buy GBTC, because you can buy it
Right.
with your IRA, with your 401k, but you don't have to deal with the wallet because you know what they'll do with that through the trust company. And so there's a strong demand for digital already for folks under 40, but the wealth right now is held by the folks over 40. But within the next 5 to 10 years, that's going to move from one generation down to the next. And so the number of digital assets available for these younger folk, for the millennials, has to start to rise. And so either it has to start to rise or the supply that's sitting there right now is going to go up in price because of the demand. And so that to me is sort of a very compelling view for why crypto will do well over the next 10 to 20 years. It's because the demand's already there. The demand is going to rise as the supply of dollars moves from one generation down to the other.
So you're long digital assets the next decade or two?
Well, long personally, for sure. Long the asset class, absolutely. I think, you know, the New York Stock Exchange bought backed, and they didn't do it for fun. They did it because they see digital as being the future. And if you want to leapfrog NASDAQ, what better thing to do than to get into digital? Because though NASDAQ talks about themselves being a technology company, if they're still doing it in an analog way, are they really technology? And
Right.
so I think that, you know, there are strides being made in traditional finance. I think that traditional finance right now is maybe like in 2012, Elon Musk knocked on everyone's doors and said, all the big four, and he said, look, I'm doing electric cars. They said, electric cars? Yeah, I mean, that sounds like a fanciful project. But you know what? Why don't you work on that for a couple of years and we'll buy you? You know, if it works out and you do all the research yourself, you know, we'll get in, but we'll buy you. But we can't get involved today. Why can't you get involved? Well, because back, if you remember in 2012, GM, Chrysler, it seems everybody, for every 30,000 car they sold, 3,000 or 4,000 had to go pay for the pension fund. So they had around 10% of all of their money on every car's revenue going off to pay pension funds. And one by one, they all had to get restructured or they went bankrupt. Now, in the meantime, you know, Elon Musk turned around and made a company that's now larger than these other companies. Now they can't buy them. And I think digital assets is like that today as well, in that banks would love to get into digital, but they also pay around 8.5% of all of their revenues on legacy products, legacy IT. So when you go into the Citibanks of the world or the Chases and you say, hey, what's your budget like? Well, 8.5% from day one, 8.5% of all the revenue for the year has to pay for the Fortran or the Pascal that's running their ATM machine. And that's crazy. Now, obviously, if they could scrap that and start running everything on newer languages, it'd probably save a lot of money, but they can't because it's so ingrained. So they don't have a pension fund problem, but they have a legacy IT problem. And then upstarts are going to come along and say, well, you know what, we can do things in the digital arena. Why don't you join us, Chase, or why don't you join us, Goldman and Chase? So, well, you know, we'll do a valiant effort with that, but we're not moving everything that way. We'll wait until everyone else moves that way. Just like the car companies did with electric. And
Great perspective.
So I think that there's going to be a tremendous move towards digital. I don't know when it's going to start. I think that there's an excitement right now. If you were to look at the volumes going through in the crypto exchanges over the past week to 2 weeks, you know, they're up 30-40%. If you were to look at the subscriptions that are going on in podcasts, I mean, probably your own as well, and YouTube videos, tremendous interest there as well. And so I think that what folks are seeing is, you know, when the New York Stock Exchange announces that they're going to be closing down the floor of the New York Stock Exchange, and now it's all going to be traded online, folks are sort of like, well, you know, maybe I feel more comfortable in doing my trades online, even though there's absolutely no correlation between the two. But when they hear Fed president talking about how they have unlimited resources to buy fixed income in the market, they start thinking, well, you know what, maybe I should be in something else. And I think that, you know, there's been enough central banks around the world in the past week that have talked about unlimited quantities of cash to be thrown to save the markets, that folks are then thinking, well, maybe I should be a little bit invested in something else. Now, what does a little bit invested mean? Does it mean 5%, 10%, 2% of your net worth? I've got no idea. But I think that opening people's minds up to investing in something else and to getting involved in cryptocurrency this past week has done a tremendous service towards that.
Good point. Good point. You know, you brought up some stuff there. I'd like to kind of unwind a couple of those things. I have been increasing my financial literacy since I got into this space. Part of that is understanding the history of money, understanding the history of fiat currencies and things of that nature. I'm no expert by any stretch of the imagination, but maybe I know enough to be dangerous. So I have a couple of thoughts. And that is, history has shown us when you continue to flood your economy with a free floating, basically fiat, this debasement, and you're destroying savings, it's insane. You're creating all this debt by buying bonds that got to be paid. I mean, it's just absolutely insane. One of the things that comes up for me is, what is the end game? Because we've seen in countries like Venezuela, when the printing presses get rolling and they aren't able to have their GDP actually go up, right? You can't get money into the country. You get deflation followed by hyperinflation. And I'm curious if you see the tactics being implemented currently having history repeat itself with this, period of deflation followed by a period of hyperinflation.
Well, let's talk about the three economies you'd probably like to discuss when it comes to hyperinflation: Venezuela, Weimar Germany, and also Zimbabwe. Okay. And we all make jokes about they print, their money's worth nothing. Well, the money's worth nothing before they started to print. Okay. No one really puts money into Venezuela. No one really puts money into Zimbabwe. And Germany was a disaster. The US dollar right now is that to which everyone wants to attain. People borrow in US dollars around the world. People pay for their trade in US dollars. Oil is priced in US dollars. For as long as that is the case, the US holds a trump card over all of these others that print, and that is that people need it. Now, people, especially right now, need dollars, because folks that are abroad in emerging markets that borrowed in US dollars now find that as the dollar strengthens by 10%, guess what? The debt that they owe has gone up.
Debt goes up, right.
They can't afford to service that debt, which is why you see the dollar rise heavily up against Mexican peso, against the South African rand. Pretty much the dollar's risen against every emerging market country over the past couple of weeks. And the DXY, or the dollar index, has spiked up to new highs. Now, that's because the demand for dollars is rising rapidly as the cost of the US dollar goes up. So the Fed has a choice. They can flood the world with dollars, which is what they're doing right now, to try to take that pressure off of the emerging markets and other countries that have borrowed in the US dollar. And they do that by talking about unlimited quantities that they can send out into the market. Now, a lot of these unlimited quantities that they discuss are things that they put into the market and then they slowly pull back over time. But of course, the balance sheet has now blown up. But has it blown up to an extent whereby it's not serviceable? Well, the fact is the US is still that lender of last resort. The US is still the money center of the world. Now, let's say China was to move into that. If China was to turn around and say, you know what, from now on, we're only going to buy oil in Chinese renminbi.
Right.
We're only going to do our trade. And remember, China now is number one or number two trade partner with every single country around the world. Mm-hmm. So every country in the world now, China is the first or second largest trade partner. So China could turn around and say, we don't want to pay in dollars anymore. We want you to pay us in Chinese renminbi and in the yuan. And in that regard, then the US stops being the reserve currency of the world, and maybe folks start accumulating the Chinese currency. And the Chinese currency right now under the SDR basket, it's around what, 2 or 3% is de minimis compared to the US share. And so but the reason that the Chinese part of the currency basket for the IMF's SDR is so small is because China doesn't have a very large fixed income market. So what China needs to do is build up their fixed income market so that if you hold Chinese reserves,
So to clarify that point for me, have they exported I mean, are they
if you are
their
if
fixed
you
income market? Because I know a lot of Chinese folks who, I guess, you know what? They're not. You're right. They import it. They get their fixed income products elsewhere.
well, one of the best ways that China talks about building their FX reserves. Now, what
Uh-huh.
that means is they buy European debt, they buy Japanese debt, they buy Korean debt, they buy US debt. When they buy that debt, it causes their currency to weaken against the country that they're buying the debt from.
Okay.
And about, I think it was probably around 2010, I wrote a piece for the Wall Street Journal that talked about how some see the hand of China behind yen's rise. Because the Japanese were talking in the Diet about how it was unfair that China could buy unlimited amounts of Japanese JGBs, but Japan couldn't buy any Chinese fixed income. So in other words, the Chinese were selling the Chinese currency, buying the yen, causing the yen to strengthen against China, and Japan couldn't go against that. They couldn't push against it.
Sure.
What that meant was that then the Chinese currency was cheaper than the yen in international markets, and so people would buy their goods from China rather than from Japan. So there's an unfair part here to international finance in that if I want to buy Chinese fixed income in the size that you can buy US fixed income, it just doesn't exist. The market's not there. So if the Chinese wanted their currency to become the global reserve currency, they'd have to build out in a very, very large way their domestic bond market. And they haven't done that just yet. And so until they do that, you're kind of stuck with the US dollar as being your reserve currency. Even however much they print, it really doesn't matter. Now, here's an example. Over the past week, we've turned around and everyone said, look, the Fed said unlimited amounts. They're going to be flooding the market with dollars. But look at the DXY, look at the dollar index. So that's the price of the dollar versus a basket of currencies.
Right.
It's trading near highs. Sure, it's come back a couple of percent today, but it's still trading near highs. Until that starts to move off, you're not going to see this rally in Bitcoin or in crypto assets that everyone's looking for. And when everyone talks about, well, Bitcoin was trading at $20,000, look where the DXY was then. It was trading around 90. And right now it's trading above 100. So you've got like a 10% move weaker in the dollar before you can start believing that Bitcoin's going to get that fire under it and it's going to push it much, much higher.
Well,
Because
wouldn't that same principle apply to gold?
it does apply to gold
Yeah,
to an
that's what I
extent,
thought.
but people think of Bitcoin as a currency. They don't think of gold as a currency. They still believe that gold is a store of wealth.
Okay.
Now, certainly for the over 40s. And remember, there's the under 40s, over 40s, and that's the big generational divide right now. But there's no one under 40 years old that's saying, you know what, let me buy gold. They're saying, let's buy Bitcoin. Over 40 years old, they don't say anything about Bitcoin, but they love gold. Now, gold is talked about by many podcasts just because you get the gold bugs, and the gold bugs are huge watchers of podcasts. They get
Right.
very, very excited about it. And that's why Jim does so well. And you talked about him in the Modern Wall Street roundtable that I did. But I think that, gold versus Bitcoin is an argument that's going to go on for quite some time. When the lights go out and there's no power, I don't want Bitcoin, I want gold.
Me too.
But when it's Armageddon, I don't want gold, I'd rather a gun. And that's just the nature of, where the world, there's certain structures and certain ways you want it. As long as we've got electricity, Bitcoin's fantastic. I don't have to store it like I do gold. It doesn't take up, a big hole in my floor where I'm hiding it.
Right.
It takes up, it's a tiny little thing that I can, wear around my neck. But so now, and I can carry it around. I don't need a big truck to carry Bitcoin with, but I do for gold. And so, yeah, there are huge differences between the two. Now you have to pay for custody with Bitcoin, much as you have to pay for custody with gold. So there's some similarities there. There's a finite, theoretically, but then again, everyone talks about how there's an asteroid floating above the Earth that's all made of gold, that they could mine that and suddenly double, triple the gold on Earth. Sure, but at the same time, you could also create a new cryptocurrency. There's not $19 million Ethereum. Let's create some more. Let's create Ethereum. Let's create XRP. Let's create. You can create more and more cryptocurrencies, just like you can create. Or maybe you could find more gold. But there's also other precious metals. There's also platinum. Everyone's got their own choice of what they want and what they have. Some people like gold because they can touch it, they can feel it, they like to look at it. People have liked that for thousands and thousands of years.
Right.
Bitcoin, you can't really touch and feel. You can look at it, you can see what your balance is, but you can't touch it, feel it, smell it, look at it, smile at it. You know, everyone's got different things that they're into. Some people like cats, some like dogs.
Right. No, I get it. I get it. I get it. You know, here's just some insight from me. So I'm going to ask a couple of questions. Really don't have anything to do with FX. Don't have anything to do with the topics that we've been covering. But you possess qualities that would make and do make a great teacher. So I have two questions for you. One, who were the folks that really influenced you or mentored you as you developed your worldviews, as you decided what subjects you wanted to study, and then obviously, you know, the career path that you've taken? I am absolutely certain you've either had an official mentor or unofficial mentors or people that have really like inspired some stuff inside of you. Do you remember any of those folks? You want to maybe elaborate a little bit on what you may have got from them?
I don't know if there's a lot of individuals. I think undergraduate was Carnegie Mellon. Carnegie Mellon was very much a statistical focus, a scientific approach when it came to economics. It's factual. It's
Yeah.
with a computer science bent. You know, because Carnegie Mellon in 1990, when I got there in 1988, graduated in 92, but you know, we were using the internet back then. We were on Mosaic or Netscape or, you know, the early editions of what ultimately Google One. But we were all using it and abusing it in different ways. But we knew that it was going to be the next big thing. And I thought about doing a PhD in economics, but then was talked down from that by a number of folks at Lehman Brothers. I went to work at Lehman Brothers in economics. And there I was working with Bob Barbera and Alan Sinai, both economists at Shearson Lehman and Lehman Brothers at the time. They were very instrumental in sort of convincing me that doing a PhD and becoming an expert in one specific thing that no one else cared about was probably not for me. But I still wanted more education and I wanted to learn more, and Yale sort of popped up. And Yale's not the traditional place you go to for doing an MBA, at least it wasn't back then, because what they offered was a master's in both public and private management. But what I figured was that the more you move up the chain in a company, the more you're dealing with the public sector. And you know, every CEO doesn't just talk about what's happening in his sector, he talks about what he's doing with the government. And it's very important to see how people move with the public sector, just as important in understanding the private sector. And Yale was the only one that was really specifically would talk about both. And we'd have, you know, mayors come in and talk to us, or finance ministers come talk to us. You know, a lot of my class that from the time ended up working either in Mexico as a finance minister or the economics minister, one of them running for president. You know, a lot of folk, but there was a very strong interest at that time in public policy and understanding how that relates to the private sector. Coming to Morgan Stanley, I think Zoe Cruz, who became president of Morgan Stanley, but she was running the foreign exchange business at the time, was very, very inspirational in that she really understood how the markets worked, how they ran, and treated all of us on a very flat managerial level, in that you could go to her at any time and talk about whatever you needed to do. But I think that in general, traders get molded by their trading desk, by those around them. I think that the Morgan Stanley 10 years there definitely was a great molding way, because I was working with a chap from Germany, another one from Switzerland, another one from Italy. You get the guy from Japan, someone from China, but you're not dealing with just the one US centric view. You're constantly dealing with a very international view and listening to how other people have different viewpoints, taking those and then coming up with what you believe to be your truth. It also, though, means that I've never, for the last, 20 odd years of my career, I haven't really picked up the newspaper to read it. Instead, we get our news from Reuters, from Bloomberg, from Zero Hedge, or from Twitter, or from our own sources, our own reporters, the people that we know, the people that we get the direct news from, and we think of the newspapers being, that was yesterday. So as a trader, you get your news up to the moment on a very current basis. People are calling you constantly. Have you seen this? Do you know this? And so we just look at the world in a very different way. We're not spoon-fed news. In essence, what we do is we take what we read and then we create our own news. And I think that that's maybe the best way to educate yourself and ourselves is by finding your own news sources and cultivating that correctly and making it your own.
I could not agree more. I've developed some aggregators. I mean, obviously Twitter, I find Twitter to be incredible, you know, for me, as far as getting data quickly.
Yeah.
It points me in a direction and then I can go find and dig into it. The second part of that question, and thank you for that answer, by the way. The second part of that would be, is there somebody in your sphere currently that you've kind of taken under your wing that you're mentoring?
I don't really think of myself as a mentor. I mean, I think I share my knowledge quite easily. It's not really hard to get in touch with me or to talk to me, and I'm pretty much an open book. And so I wouldn't say that there's anyone that I sort of take under my wing. I'd say that there's a lot of folks that I talk to on a daily basis,
Okay.
and we all learn from each other. But I wouldn't say that I'm a teacher. I think I'm constantly learning.
I think it's that quality. I'll be honest with you. I think it's that quality foundationally that makes a great teacher. Is that
Possibly.
constantly learning? You know, I got this from a previous guest. I've always kind of held it to be true, but I didn't have a phrase for it, and now I do. And that is, I have very strong opinions, very weakly held. In other words, if the facts change tomorrow, I will change my opinion.
Yeah, and I think that's fair. I think one of the craziest things that we hear during the primaries is when someone's running for office and the other person says, well, look, 10 years ago you said this. It's sort of like, really? Do you really have to have the same opinion when you were 18 years old, when you're 60? No. People's opinions should be constantly changed based on new information. And the expectation that the questioner always has that someone's view would be exactly the same as it was when they were 20 or when they were 30 or 40 is crazy, because personalities change every decade. We're not the same person as when we were 18 years old.
Right.
And I mean, it astounds me sometimes, these primary debates and presidential debates, when folks are pointed to, look, we've got you now. I've got this video of you 30 years ago. It's like, really?
It's insane. Now, just like a answer if you feel comfortable, how often do you get to go back to Scotland?
I was back there for New Year's.
Oh, okay. So a couple times a year?
One or two times a year, yeah.
Good for you.
Yeah.
Good for you. Still got a bunch of family back there, I'm assuming.
A lot of family back there, yeah.
Right.
Everyone hunkering down right now.
A friend of mine used to have this saying, he's very proud Scot. I'm probably going to screw this accent up, but bear with me. You'll get the gist of it. He used to say, if it isn't Scottish, it isn't shit. No, chat. How would
crap.
you?
If it isn't Scottish, it's crap. That's a quote. Now that quote's actually from Saturday Night Live.
Love it.
Yeah, it's true.
He used to bust me up every time he did it. Every time, no matter how many times I heard it.
I have multiple books that talk about how Scotland invented the modern world.
That's great.
But it's true.
Great. You're smart.
That's what we're taught when we're growing up.
You're smart, you're articulate, you're funny, and you're doing great work. I hope that there are more and more platforms for you to reach more and more people, because you're a reasonable sound, like I said, articulate voice in this sea of noise. There's a lot of noise. There's a lot of noise.
I think you're right there. And well, in terms of the lot of noise, I'm not sure about the articulate. I mean, I remember I used to go to forex magnets conferences in London.
Okay.
And there you'd go, then you'd hear the latest technology that was being used in London or elsewhere. And there used to be folks that would sell, mobile phones in a couple of the booths there. And then a year later, they were telling me why I should be buying Bitcoin. And it's sort of like there is this sort of constant promotional push that I think turns a lot of people off. And what traditional investors want is they want to have a measured, interesting conversation with somebody that isn't about, oh, you got to buy this, it's going to the moon, look at the stock to flow. And I think that there is way too much of the constant promotion of different products as opposed to just the level-headed discussion. And even a lot of level-headed discussions are really just promotional. You know what I mean? I think there's lots of folks, or I think even the industry in terms of the press for specifically this type of product or the crypto product as well. A lot of the time it's sort of like, yeah, you know, we'll bring you on. What are you going to pay us? Which to me is just, you know, it's shocking in that this should really be about right now. It's an educational time. I think it's going to take 5 to 20 years of education and not promotion that are going to get people interested and excited about this product. Email is something that happened overnight. Digital music, it feels like it happened overnight. I still remember tape recorders, and I remember going to buy my tapes at the station. But I think that what's really interesting is folks at some point will suddenly switch over and say, we want to have digital assets. We want to be in digital, because that's just the way things are going, and you can't hold it back. And at some point, your mortgage will be sitting there on the blockchain. Why isn't it today? I don't know. Maybe we should ask the lobbyists for the title agents that are sitting there saying, well, maybe shouldn't be on the blockchain. But trust is so very important. And right now we give that trust to others when we could actually hold it ourselves on the blockchain. And I think that once we move towards that, it's going to be a great new world. So, let's see what happens.
Yeah, I couldn't agree more. This is my own experience, that I'm putting out here, but the value proposition for this new asset class, the innovation that's happening within, its value got deeper and wider and larger for me the more I learned about the existing system. Like, I can distinctly remember 2017, my buddy saying, hey, I'm buying some Bitcoin, da-da-da-da-da. Matter of fact, I had a guy at a poker table one night want to basically give me 5 to 1. So for every dollar I gave him, he'd give me $5 worth of Bitcoin because he went broke on the poker table and he wanted to keep playing. And he explained Bitcoin to me, this digital money, da-da-da-da-da-da. And I went, nah, I don't digital money. I got money. Look, I go to the machine, I put my card in, I get money out. I have no need for it. And it wasn't until I started really understanding and getting some financial literacy and understanding some history around currencies, around monetary policies, around fractional reserve banking, all these things, that I was starting, okay, now I can see there's a deeper value than just the speed of movement. And I think like you said, education is key. That's what this whole Crypto Espanol project I'm involved in is all about. It's about providing information and education. And what people do with that, hopefully it helps people make better business choices or better investment choices, or even just better, choices as far as maybe what business they may want to go into versus this or that and the other thing. So there's a lot to be had. I think it's going to be a wonderful future for all of us involved, and I'm excited to see where it goes. I hope that what you were talking about, the US dollar being kind of beyond reproach for at least the next
for now
future.
For now,
I hope that holds up, because it's definitely helping me in Costa Rica. All my money is in US dollars, and obviously as it gets stronger to other nations, my buying power gets better down here, and that's always nice. For me, but I know that if I'm being helped, then somebody's also being hurt.
That's right. Well, it's going to be tougher for Costa Rica to import goods from the United States.
Well, down here, and we'll finish with this because I'm looking at the clock. I want to be respectful of your time because I really do appreciate it. But I'll tell you, one of the things I found really interesting as I was looking into Costa Rica and spend some time down here. I've been down here a year and a half. There are 2 major ports for goods that come in, one on the Caribbean side and one here on the Pacific coast side. Literally 90% of our Caribbean port was refurbished with Chinese money and 25-year contracts to Chinese companies and new trade agreements with China that do exclude the US dollar. There was a small Costa Rican colon to yuan pair, and there are some small businessmen who do nothing but make that market. That's all they do.
Right.
Is
And
trade
then,
cologne to yuan, cologne to yuan.
well, you can pick your hemisphere, and China's done a very good job of going in, redoing ports, doing infrastructure projects in lots of different countries, and tying those up with Chinese companies that end up doing the refurbishment, the Chinese employees that end up doing the work. And maybe when they do these, they're also backed by commodities, the loans that they make to different countries, and all of this allows them to have a lot more representation and votes go their way at places like the United Nations. So in the UN in the old days, the US would say, look, of course you're going to do this. We give you aid. Well, the US can't do that as much anymore because China now can. And China says, well, of course you're going to vote with us because otherwise we'll pull out your aid, or we'll call you on the debt that you owe us, or we'll take out the commodities that are backed by this debt. And so, look, this is how you increase your sphere of influence. The US used to do it. Let's build a base in this country. Let's build a base in that country.
No, I get that. That's some political juice. See, what I was reading and what I was seeing to me appeared to be a land grab and a foothold in a way to circumvent the old,
that too.
The old way. But this political influence angle wasn't one that I really put any thought to. You just kind of, I'm thinking, wow, you know what? Obviously it can be a lot deeper than just getting some property.
For sure. Look, sphere of influence is very, very important in global economics.
Wow.
And you have influence if you're the number one or number two trading partner with any country, because you can squeeze them at any time. And so, or if you're the lender of last resort, if you think about a lot of countries in Africa, I'd say it would be the best example, where China's come in as the lender of last resort and said, look, we'll lend you billions of dollars, but it's going to be backed by your bauxite or your copper holdings or whatever asset it is. And they may know that at some point that debt won't be able to be repaid, but now they own all of the commodities in that country. And so, by doing that, sure, that country gets the money. The money probably won't last very long, but they've just gotten a lot of influence as well.
Wow, talk about leaving on a high note. Now I got a whole new like rabbit hole to go down and look at Latin American countries and that Chinese influence. That could be an interesting project. Doug, thank you so much for taking the time to chat with me today. You've added a few points to my financial IQ, and I really appreciate that. I'm going to obviously put your Twitter down here in the show notes underneath. Is there some other place other than like LinkedIn and Twitter? I think those are two pretty easy ways to find you, right?
I think those are the two easiest ways right now. Yes. Thank you very much.
Well, we'll call that good. So
thank you, Jerry.
Yeah, hey, Doug, you're the best, man. I really, again, appreciate it. Much gratitude and nothing but love, peace, and safety for you and your family, wherever they are in the world, as we, work through this difficult global time.
All right. Well, thank you very much.
You bet. So, folks, thanks for tuning into One-on-One with Jerry Hall. And until next time, Pura Vida.